Chapter 4 Part 1 Contents: Categorization of ledger accounts: sales ledger, purchase ledger, nominal ledger, cash book, the 2-column cash book, contra entries, bank overdraft, the 3-column cash book, cash discount, discount allowed and received. Categorization of ledger accounts: sales ledger, the ledger in which the accounts of credit customers are maintained. Purchase ledger, ledger in which the accounts of credit suppliers are maintained. Nominal general ledger, the ledger where all the other accounts are maintained. Sales ledger, this is also referred to as the debtors ledger or trade receivables ledger. All the personal accounts of credit customers are kept in the sales ledger. Purchase ledger, this is also referred to as the creditors ledger or trade payables ledger. All the personal accounts of credit suppliers are kept in the purchases ledger. Nominal ledger, this is also referred to as the general ledger. Apart from the cash book, the bank account and the accounts of credit customers and credit suppliers, all the remaining accounts are kept in the nominal ledger. This ledger will contain an account of assets, liabilities, expenses, income, sales, purchases and returns. Asset account are also known as real accounts. Accounts for expenses, income and capital are known as nominal accounts. Cash book and petty cash book. Cash books, these contain the main cash book wherein all amounts received and paid in cash and checks are recorded. On the petty cash book contains details of small amounts spent daily on various accounts are recorded. The 2-column cash book. The 2-column cash book explains how two separate accounts, a cash account and a bank account, are maintained to record the movement of money. In practice, it is common for these accounts to be moved from ledger and shown in the separate book shown as the cash book. The cash account and the bank account appear side by side in the cash book. The rules of double entry bookkeeping are still applied. Any money received is debited in the cash book. If the money is placed in the cash till, it will be entered in the cash column, and if it is paid into bank, it will be entered in the bank column. Any amount paid out is credited in the cash book. If the amount is paid in cash, it will be entered in the cash column, and if it is paid out of the bank, it will be entered in the bank column. Whilst the cash account and the bank account appear side by side, they still keep their own identity and must be balanced separately. Since the cash book is part of double entry system, it represents ledger account for both cash and bank. It is, however, also a book of prime entry because it is one of the books in which transactions should be recorded, therefore being entered in the ledger. Contra entries. Contra entries sometimes surplus cash is paid into bank or money may be drawn from the bank to place in cash. Such transactions are known as contra entries because they appear on both sides of the cash book, debited to one account and credited to the other. These transactions are recorded by applying the usual rules of double entry by debiting the account, receiving the money and crediting the account giving the money. The name of the account where the double entry is made is written in details column. In each case, the letter C is usually entered in the folio column to indicate that double entry is on the opposite side of the Cassian book. Bank overdraft. As explained earlier, the cash column and the bank column of cash book are balanced separately as they represent two separate accounts. The balance on the cash column will always be brought down as debit balance at the start of the next trading period. The only exception to this is when there is no cash left in the cash account, in which case the balance will be nil. It is not possible to have a credit balance on a cash account. It is, however, possible to have a credit balance on a bank account. The bank may allow the business to have bank overdraft. This means that the bank allows the business to pay out more from the bank than it is put into the bank. Interest will be charged by the bank on the amount withdrawn. In the cash book, the bank account is balanced in the usual way and the balance will be brought down on the credit side. This represents the amount the business owes the bank and its liability. The 3-column cash book. Many businesses maintain a 3-column cash book rather than a 2-column cash book. The difference is that the 3-column cash book has an extra money column on each side to record cash discount. The 3-column cash book. The 3-column cash book. Many businesses maintain a 3-column cash book rather than a 2-column cash book. The difference is that cash discount is recorded. Cash discount is an allowance given to the customer when an account is settled within a limited time limit set by the supplier. An account does not have to be paid in cash to qualify for cash discount. The time of payment is the deciding factor rather than how the account is paid. Cash discount is a means of encouraging customers to pay their accounts promptly. The supplier will receive an amount slightly less than the due amount. However, the money is paid earlier and so it is available for use within the business. Cash discount. The 3-column cash book has an extra money column on each side to record cash discount. Cash discount is allowance given to customer when an account is settled within a time limit set by the supplier. An account does not have to be paid in cash to qualify for cash discount. The time of payment is the deciding factor rather than how the account is paid. Cash discount is a means of encouraging customers to pay their accounts promptly. The supplier will still receive an amount slightly less than the amount due amount. However, the money is paid earlier and so it is valuable for use within the business. Cash discount allowed and received. Cash discount allowed is the discount business allows its credit customers when they pay their accounts within a set time. This is an expense of the business. It is the most cost of having debt settled properly. Discount received is a discount of business receives credit suppliers when it pays their accounts within a set time. This is an income of the business. It is the benefit received from settling debts promptly. It is important to realize that discount received does not involve the receipt of the money. The supplier simply accepts less money in settlement of the account. Dishonored check. A dishonored check is a check received with the debtor's bank refuses to pay. This may occur because the debtor does not have enough money in her bank account, or it may be because of an error of the check. Example: no signature, no date, the amount in words and the amount in figures do not agree. If a check is dishonored, it is returned to the business that paid the check into the bank. The business must record the return of this check by creating the bank account and debiting the debtor's account. The reverse of the entries made when the check was received. The business will also inform the debtor that this amount is unpaid.